Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Power Breakfast in the Mumbai News Centre. I am Anisha Jain and with me is Manglam Malu. Well, Manglam doesn't look like it's going to be a good day at all. We have seen the worst day since 2011 when it comes to the US markets, and we are seeing similar reaction across Asia with the Nikkei down about 4%.
You said it's not going to be a good day. I think it's going to be a bad day, you know, Anisha. The worst day since 2011 for the S&P. The Dow saw a 1,500 point fall intraday, and that's the worst in the history. You can take a look at the numbers, you can take a look at various reasons which unfortunately no one's been able to point out at. But the one data point that really stands out, it's definitely not the return of, bond yields rising. It's definitely not the return of bears rising. The one data point that stands out is the CBOE VIX.
Volatility.
The fear index. After the sharp sell-off, the highest sell-off, the largest sell-off that we've seen in the Dow Jones in history, the Asian markets are in the red and indicates that our markets will open with a cut of almost 300 points. With us now is Anuj in the studio. Anuj, you know, for the last many months, everyone was believing that you buy something, it becomes 50% higher, 100% higher, and that was the kind of market that there is. There's been a return of fear. What do you make of this? Was this warranted and was it necessary? Things like these, have they happened before? What does one do in a situation like this?
Well, yes, they have happened before in the past, Manglam and Anisha, and I don't know, I think maybe you guys were teenagers at that point. You know, in 2006, I think 2004, 2006 phase, I've seen, those phases, you guys must be enjoying in school and college at that point, right? And doing far better things than coming early morning and reporting on 500-point slide or 1,000-point slide. Look, the point here is that all through the January, market was giving some warning signs. And right now, everyone is asking, and we're running this, why the US market plunged. When the market goes up, nobody asks why the market is rising, right? On that day, you feel that, look, I told you so, that this stock is rising, that stock is rising. Markets basically, over a period of time, trade at an equilibrium. And right now, what's happened is that over the last 6 months or 1 year, the market was trading way above equilibrium. So there's a good chance that the market comes down to equilibrium and even below that. That is what the concept of greed and fear is, right? The CBOE volatility index was up 120%. For longest, for last 6 months, 1 year, the easiest trade in the market was to sell volatility because there was no volatility in the market. And that trade has reversed. It's as simple as that. Nothing wrong has happened in the market. It's just correcting some of the excesses. And for our market, the rally started at 6,900, 7,000 thereabout. From 7,000 to 11,100 for a 4,100, 4,200 points, you haven't had any significant correction. So bull market corrections can be 1/3 of overall gains, sometimes 50% of overall gains. So there's a good chance that you fall 1,300 to 2,000 points. Now this is not a market in which you want to look at levels. This is not a market in which you say, okay, 10,500 is sacrosanct or 10,200 is sacrosanct. Something has changed globally in terms of what has happened to the risky assets. You can see that in cryptocurrencies. You can see that in a couple of other markets as well. And most of these are interlinked. You're making money in one asset class, you're funding that into another asset class. You start to make a loss in one asset class, you start to sell the other asset class. And that is exactly what's happening right now. So look, I don't claim to be an expert on the US market. I don't think anyone here is. So the short point here is that what do you do in a market like this? I think you just simply wait it out. The market will give you signals on when to buy. What you can do perhaps is that on a day like today, if things accentuate, then some of the best stocks that you always wanted to buy, which will also correct 30-40% perhaps from the high point, maybe you take portfolio positions in these by, say, putting 5 or 6% of your money and then wait it out and then see how things move. Yesterday I heard a lot of people say that, okay, the correction is over now after one or 2 days, and that's because that's been the recent memory. We all remember the recent memory. In recent memory, the corrections have lasted 1 or 2 days, but this time it looks slightly different and slightly tough.
Okay, Anuj, but yesterday we did see the markets recover as well intraday.
Yes.
Do you think, I mean, today the cut is expected to be a lot deeper than that, but anytime the recovery is expected soon?
You know, what will happen today in particular is, Anisha, yesterday we saw a lot of recovery in the mid caps, and a lot of stocks yesterday actually ended at high point of the day. And that is, you know, that was my one big risk in closing while I was talking about it, that, you know, is it a suckers rally? Because that's how suckers rallies look. You know, they tend to make you believe that, okay, the correction is over and now things are moving up, and they're normally led by good quality stocks. For example, yesterday, you know, you saw big rallies in stocks like Escorts, NIIT Tech, a lot of these stocks. The issue would be, my sense is, if these stocks start to break yesterday's low, some of the stocks which had a big rally towards the end, if these stocks start to break yesterday's low, in that case there would be some problem. Now, all I'm talking about here is right now is the near term. But, you know, if your basic call is that this is a big bull market and we are maybe in the second stage of a big bull market. In the first stage, of course, you will not have a correction because the base effect was so low and the market will rally. In the second phase of bull markets, you will have these kind of corrections. I remember when we had, for me, the biggest bull market remains the 2003 to 2007 phase, when you had such a, you know, huge money being made in individual stocks. I remember there were 3 or 4 instances of, you know, market correcting 10, 20, even 30%. And that will happen when bull markets go into a mature phase. Right now, the bull markets are in a slightly mature phase. These corrections will happen, but good quality stocks, if you buy on days like today and phases like today, starting today, in that case, 2 years down the line, you'll realize that that was a great buying opportunity. Of course, today, you know, it requires a brave man to go out and buy, or a brave woman to go out and buy. But, you know, that's how equity markets work. It's about greed and fear. You know, you have to control the both and have to find equilibrium somewhere in between.
A final question, Anuj, then. I know this chat has extended a little more, but the one variable that we've been attributing this uptick to is the kind of flows that have come in via the domestic equity, via the FIIs who are putting money right now. After the budget, that LTCG thing, now the first sell-off, the real sell-off that we've seen in the last 6 months, so to say.
Yes.
Cost of money increasing a little bit with the yields rising. Do you think the flows, incremental flows into the markets, are a bit of a risk, or at the risk of thinning down from what we've seen before?
I don't know if you have seen this movie 21. You know, this is about a real life story about some MIT students developing a system which can beat the casino, right? It's all about playing the edges. In that, I think Kevin Spacey, you know, of course, one of the all-time great actors, you know, he made this point, always account for variable change. So right now, you know, what happened, and, you know, we made this point the day after budget. You know, you assume that equity markets will keep going up, and that's why you assume that if you put a 10% long-term capital gains tax, this is how much you will make in a year. There's a good chance that in FY19, the 31st January high that you have remains the high for a lot of stocks. So in that case, you don't get anything out of the LTCG. So that's a different question. On the question of money, I think if you know, that's going to be the big question now, because a lot of this money which has come in has not seen correction, both from those who are investing and both from the fund managers' point of view. There are a lot of young fund managers who have made a lot of money over the last 2 or 3 years. Even they haven't seen correction. So I think this will be a test, you know, how to wade through these corrections. I don't think you should panic, though, frankly, because the market rallied from, as I said, 7,000 to 11,000. It goes to, even if it goes to 9,500 or 9,600, you are still in a bull market territory. You're in correction territory, but you're still in a bull market territory. That point should not be forgotten.
Well, on to a CNBC-TV18 exclusive then. Top ministers of Modi government, Nitin Gadkari and Dharmendra Pradhan, have said that there is no confusion on the supply of BS6 compliant fuel. Talking to the CNBC-TV18 at the Overdrive Awards last evening, the ministers asserted that the fuel will be available in the NCR region by the deadline of 1st April 2018.
By 2018 April 1st, our marketing company will be in all readiness to supply BS6 standard of fuel in national capital.
Okay, in the national capital.
Actually, there is addition one thing. My friend here, Mr. Pradhan, he assured me, and I'm 100% confident about him, that there is no fuel problem. Before 1 April 2020, we will see that the fuel for Euro 6 will be available in the market, no problem from Petroleum Ministry side, and we are confident and we are firm on it.
Okay, you preempted my question. Yes, sir.
As Gadkari ji committed on behalf of government. We are spending more than 90,000 crores for upgrading our existing refineries. By 2020, April 1st, we will be ready with the BS6. Before that, Mathura refinery and Panipat refinery, they will be able to produce. That is the region we have committed ourselves. By 1st April 2018, we will be ready to supply, not pilot basis, to all the 350 or 380 petrol pumps in the capital region by all the three companies with BS6 standard.